U.S. stocks and equity trading no longer limited to Wall Street hours or traditional brokers. Thanks to blockchain technology, tokenized equity and stock trading is now possible, letting investors access real shares, synthetic markets, and real-world assets trading both on-chain and off-chain. Platforms like Kraken, Swarm, Ondo Finance, GTrade, Aster, and Synthetics are pioneering this shift, each with different strengths for long-term holders and short-term traders. In this video, we'll explore how tokenized stocks work, where you can earn dividends or secure long-term exposure, and which platforms are built for day trading or leverage strategies. Are you living outside the United States and wondering if you can trade U.S. stocks on Kraken? Well, the good news is yes, you can. Kraken has launched something called X-Stocks, tokenized versions of popular U.S. stocks and ETFs like Apple, Tesla, Nvidia, and many more. But before you jump in, let's break down exactly who's eligible, how it works, and what you need to know before trading. Tokenized stocks and tokenized equity. Tokenized stocks and equities are digital representations of company shares on a blockchain. Tokenized stocks represent publicly traded shares, such as those traded on the S&P 500 index, while tokenized equities represent shares in private companies. Natively issued tokens. Native tokenization involves companies issuing their own shares directly on-chain, without using an intermediary or wrapper. The blockchain becomes the primary source of truth for ownership records, with tokenized shares representing original equity rather than mirrored or wrapped versions. Wrapped tokens. Wrapped tokens are issued on-chain and backed by publicly traded shares held with a licensed and regulated custodian or broker-dealer. Each token mirrors the price of the underlying stock. Synthetic tokens. Synthetic tokens are on-chain derivatives that use Oracle data to track the prices of real-world assets such as stocks without holding or being backed by the actual asset. These tokens enable on-chain exposure and 24/7 trading. First things first, X-stocks are not available to everyone. If you live in the United States, Canada, the UK, the EU, or Australia, you're out of luck because Kraken restricts access in those regions due to regulations. But if you're a non-US citizen and your country isn't on that restricted list, you're good to go. Kraken is rolling these tokenized stocks out to more than 140 countries, covering Latin America, Asia, Africa, and other parts of the world. So if you're outside the US and in an eligible region, you can start trading right now. What are X-stocks? Now let's clear up what X-stocks actually are. These aren't traditional shares. You won't get shareholder voting rights, and you won't directly receive dividends. Instead, what you're getting is a tokenized representation of the stock pegged 1-to-1 with the real thing. The cool part? Any dividends from the underlying shares are automatically reinvested into your X-stock balance. So you're still exposed to price movements and overall growth of the stock. And unlike traditional stock markets that only run during business hours, on Kraken you can trade X-stocks 24 hours a day, 7 days a week. And if you withdraw them to your own crypto wallet, you can actually trade or move them around the blockchain 24/7. How to start on Kraken. Okay, so how do you actually get started with X-stocks on Kraken? First, you'll need to verify your account to at least the intermediate level. Once that's done, head to the app or Kraken Pro and unlock X-stocks. It's just a quick confirmation that you're not a US person and that you're in an eligible country. From there, you can fund your account with fiat money, stablecoins, or crypto. Kraken even offers fee benefits if you use USD or their stablecoin USDG. And the best part? You can start trading with as little as $1. Plus, if you prefer self-custody, you can withdraw your tokenized stocks to your own wallet and even use them in DeFi protocols. Introducing Swarm. Now, Kraken isn't the only player in the tokenized stock space. There's another platform called Swarm, and it works a little differently. Swarm is a blockchain-based platform that focuses on tokenizing real-world assets like stocks, bonds, gold, and even US Treasury ETFs. Unlike Kraken, which runs more like a centralized exchange with tokenized assets available to eligible users, Swarm is closer to decentralized finance. It offers peer-to-peer trading through smart contracts, meaning you can buy and sell tokenized stocks in a way that feels more like using a DEX, except it's regulated and compliant in Europe. Swarm features. What makes Swarm stand out is flexibility. They've launched something called OpenDOTC, which is a permissionless trading service for tokenized assets. That means you can access tokenized Apple, Tesla, and other stocks, trade them 24/7, and even use them across different blockchains like Ethereum, Polygon, and Base thanks to Chainlink's cross-chain technology. On top of that, trading fees on Swarm are tied to their native token called SMT, and a portion of those fees are automatically used to buy and burn tokens, making the ecosystem more sustainable. Like Kraken, you don't get voting rights from the tokenized stocks, but you do get exposure to price action and can use the assets in DeFi for yield or collateral. Compare Kraken and Swarm. When you compare Kraken and Swarm side by side, you'll see they both give you access to tokenized versions of real-world assets, but they do it in very different ways. Kraken's X stocks are designed to feel familiar if you've ever used a centralized crypto exchange. The platform manages custody, ensures the tokens are backed one-to-one by the real underlying shares, and gives you a clean user experience with straightforward funding options. It's convenient and tightly managed, but the trade-off is that it's limited by region. If you're in the US, Canada, the UK, the EU, or Australia, you simply can't access it. For those who are eligible, though, Kraken makes it simple to get exposure to US equities without needing a traditional brokerage account. Swarm, on the other hand, leans more into the decentralized finance world. Instead of acting like a centralized broker, it uses smart contracts to let people trade tokenized stocks and other assets directly with each other. This peer-to-peer style gives users more control, especially if they prefer self-custody and the freedom to use their assets in DeFi protocols for lending, staking, or collateral. Swarm is also heavily focused on compliance within Europe, making it one of the first platforms to strike a balance between regulation and decentralization. The ability to move tokenized assets across multiple blockchains like Ethereum, Polygon, and Base adds another layer of flexibility that Kraken doesn't offer. So, if you're someone who wants a regulated, centralized experience that feels closer to traditional trading but with the benefits of blockchain, Kraken might be the better fit. If instead you're looking for a platform that pushes deeper into DeFi, giving you more autonomy, more 24/7 access, and cross-chain flexibility, then Swarm might be the way to go. Both platforms represent the future of trading, where real-world stocks, bonds, and commodities are brought on-chain and made available worldwide. And the most exciting part? We're just getting started. Tokenization is still in its early stages, which means the opportunities for global 24/7 access to traditional financial markets are only going to grow from here. Closing remarks for DX versus CX. So whether you lean towards Kraken for its simple, centralized approach or Swarm for its decentralized and flexible ecosystem, the message is clear: tokenized stocks are no longer just an idea, they're here, and they're changing the way we think about investing. If you're outside the US and curious about stepping into this new space, both platforms give you exciting ways to start. What do you think? Would you try trading tokenized stocks on Kraken or Swarm? Drop your thoughts in the comments. Trade Gains Network. Another interesting platform in this space is GTrade, built by Gains Network. Unlike Kraken or Swarm, GTrade doesn't focus on issuing tokenized stocks backed by the real underlying asset. Instead, it offers synthetic trading, where users can speculate on the price movements of stocks, forex pairs, and even crypto using decentralized liquidity pools. This means you're not actually holding tokenized Apple or Tesla shares, but you can open long or short positions on them, with leverage up to 150x on crypto and up to 50x on stocks and forex. The big draw is that GTrade is fully decentralized, gas efficient, and runs on Polygon and Arbitrum, so you can trade with minimal capital and without needing a central exchange. But the trade-off is that you don't get ownership or redeemability tied to the real-world assets. It's purely synthetic exposure designed for trading rather than investing. When you put all three side by side, you start to see the variety of approaches to bringing traditional assets on-chain. Kraken focuses on compliance and accessibility through centralized custody and tokenized shares, making it feel safe and familiar for newcomers. Swarm blends regulation with decentralization, giving users tokenized real-world assets they can trade peer-to-peer and even move across multiple chains. And GTrade takes a different angle by cutting out the need for custody altogether, instead offering synthetic exposure to stocks and other markets through decentralized liquidity. Each of these models has its own advantages depending on whether you care more about regulation, flexibility, or high-leverage trading. Aster DEX. Another compelling player emerging on this landscape is Aster DEX, a next-generation decentralized perpetual exchange built for traders who demand speed, flexibility, and around-the-clock access. Unlike platforms that offer tokenized equity ownership, Aster delivers leveraged exposure through stock perpetual contracts. Launched in July 2025, Aster now allows users to trade major U.S. stocks like Amazon, Apple, Alphabet, Meta, Microsoft, Nvidia, and Tesla with up to 50x leverage, and it operates 24/7, all without any signups or paperwork. Chainwire, A-Invest, Decrypt. What makes Aster especially powerful is that it's fully decentralized and multi-chain, aggregating deep liquidity from across various blockchains while enabling hidden orders to minimize slippage and preserve trading strategies. Pricing is highly secure too, thanks to data feeds from the PYTH network, ensuring accurate, tamper-resistant price tracking for these stock derivatives. Decrypt, A-Invest. When you place Aster alongside other platforms, the differences become striking. Kraken provides direct, custodially backed tokenized shares via a centralized exchange, XStocks. Ideal for those wanting the familiarity of traditional finance combined with crypto convenience. Swarm sits in between, offering compliant, peer-to-peer tokenized asset trading with cross-chain flexibility. GTrade gives you synthetic exposure through leveraged derivative positions, perfect for high-speed speculation. Mirror and Synthetix pioneered synthetic stocks, but their models are now more historic or foundational. Then there's Aster, which takes a full DeFi-first approach. Permissionless, leveraged trading of equities anytime, anywhere, all without giving up custody. Together, these platforms showcase a dazzling variety of routes into real-world finance on-chain. Whether you're after actual ownership, regulatory compliance, self-custodied tokens, or decentralized leverage, what unites them is a stunning shift. Financial markets are breaking free from traditional walls, giving global users real-time, borderless access to stocks, bonds, and commodities like never before. Synthetic trading of tokenized U.S. stocks. Before Kraken and Swarm came into the spotlight, Synthetix paved the way for tokenized and synthetic stock trading. Synthetix, one of the longest-running DeFi projects offering synthetic exposure to assets. Built on Ethereum and Optimism, Synthetix allows users to mint synths that track the value of real-world assets, including stocks, indices, and commodities. Unlike tokenized assets backed by custodians, Synthetix uses a system of collateral and oracles to ensure its synthetic assets track real prices. This means you can speculate on stocks and commodities directly on-chain without worrying about centralized custody. Over time, Synthetix has evolved into a liquidity backbone for many DeFi apps, powering trading platforms that want to integrate synthetic assets without building the infrastructure themselves. When you add Synthetix into the mix, you can see how the tokenized stock ecosystem offers multiple flavors of access. Kraken gives you real, custodially backed shares in a centralized exchange format. Swarm delivers compliant tokenized assets with decentralized trading options. GTrade focuses on efficient, high-leverage synthetic trading, while Synthetix remains a strong decentralized protocol for synthetic exposure. Together, they paint a clear picture. The financial world is moving on-chain, and whether through tokenized ownership or synthetic exposure, everyday investors are gaining access to markets that were once locked away behind borders, time zones, and regulatory walls. Final comparison for choosing platform for U.S. stocks and equity trading. When you line up Kraken, Swarm, GTrade, and Aster, the differences come into sharp focus. Kraken offers tokenized versions of real U.S. stocks and ETFs that are fully backed, with dividends automatically reinvested into your token balance. That makes Kraken one of the few options suitable for long-term holders who want a secure, regulated gateway into tokenized equities without losing exposure to shareholder rewards. Swarm also deals in real, custodially backed assets like stocks, bonds, and gold, and while you don't get direct shareholder rights, you do get transparent, redeemable tokens you can use in DeFi, making it another strong choice for those thinking long-term, but with more flexibility to move assets cross-chain. GTrade sits on the opposite end of the spectrum, offering only synthetic exposure. There are no dividends or asset backing. It's designed for short-term speculation with high leverage, appealing more to active traders who want to play daily price movements. Aster is similar in that it focuses on perpetual contracts, giving you 24/7 leveraged exposure to stocks without ownership or dividends. It's fast, decentralized, and built for aggressive traders rather than long-term investors. So, in simple terms, Kraken and Swarm are the platforms to watch if you care about security, dividends, and long-term holding, while GTrade and Aster are ideal for traders who want synthetic or perpetual exposure to stocks purely for short-term trading strategies. Future of tokenized stocks and equity trading. Looking ahead, the next 3 to 5 years are likely to be transformative for tokenized stocks and real-world assets on-chain. We're already seeing early signs of this shift, with platforms like Kraken, Swarm, and GTrade bringing different models of access, while pioneers like Synthetics continue to refine decentralized synthetic trading. In the near future, regulation will play a massive role. With Europe's MiCA framework coming into force and more jurisdictions clarifying their stance on tokenized assets, it's very likely that compliant platforms like Swarm will expand rapidly and onboard both retail and institutional investors. At the same time, centralized exchanges like Kraken could become gateways for millions of users who want exposure to stocks without traditional brokers. On the DeFi side, protocols like Synthetics or GTrade will likely continue innovating with synthetic markets, giving users flexible, borderless, and 24/7 access to price action without ever touching Wall Street. The result will be a global, always-on financial system where real stocks, bonds, and commodities can be traded just like Bitcoin or Ethereum. For everyday investors, that means more access, more choice, and a financial future that finally matches the speed and openness of the internet. Share your thoughts. What platforms would you prefer for stocks trading and why? Don't forget to like and subscribe for more insights.